Good afternoon, everyone. Welcome and thank you for joining us today. My name is Zach, and I'm the Outreach Coordinator here at the Taxpayers Help Center. I'm excited to be here with you to discuss tax audits. The Taxpayer Help Center is a nonprofit 501c3 organization in Northridge, California. We operate two tax clinics. One is our low-income taxpayer clinic, also referred to commonly as LITC, and there we help taxpayers resolve their tax disputes with the Internal Revenue Service. And then the second clinic we operate is the VITA, Volunteer Income Tax Assistance Clinic, in which we help prepare income taxes for free. And we are also an IRS authorized certifying acceptance agent, CAA, and accepts individual taxpayer identification numbers, also called ITINs. So if you'd like to connect with us, our email is info@taxpayershelpcenter.com, and then our Facebook is Taxpayers Help Center Inc., a nonprofit organization, and then our location is 9029 Reseda Boulevard, Suite 209, Northridge. And then we have our website listed here, and then also our telephone. All of this information is available on Google as well. If you just type in Taxpayers Help Center, you can find this information easily. And then also, if you have any questions at any time during the presentation, you can email us at info@taxpayershelpcenter.com, and a tax professional will get back to you. So the Taxpayers Help Center helps taxpayers both locally and beyond. Since the services we provide are free, donations are super important in supporting us and in helping the reach of our services. Any monetary donations are greatly appreciated. Those who can volunteer their time or expertise or spread awareness are also a great help. So if you'd like to donate to make a monetary donation, you may do so at taxpayershelpcenter.com/make-a-donation, or so you don't have to type all that in. You can just go to taxpayershelpcenter.com and then click on the tab that says make a donation. And again, anything is greatly appreciated as these donations allow us to do what we do. How to prepare for a tax audit. So today we'll discuss the process of how audit selections are made, the initial notification from the IRS, types of audits, documents they may request if you are audited, rights you should know when dealing with the IRS and audits, and then the time the audit process takes, and lastly, frequent reasons for audits. Audit selection. Few things instill fear in Americans quite like receiving a letter from the IRS announcing an income tax audit. This doesn't necessarily imply that the recipient has cheated or is unwilling to pay taxes. It often means they feel uncertain and uneasy about the process and its requirements. An IRS audit is essentially a detailed examination of your tax return to verify the information provided. Audits can happen in different ways, such as through correspondence, office visits, or field examinations. When taxpayers receive an audit notice, it's natural to feel apprehensive. This notice is not an accusation of fraud or mistakes, but a standard procedure to maintain the integrity of the tax system. Audits can be triggered randomly or based on specific red flags in your tax return, like unusual deductions or income discrepancies. High-income earners may also have a greater chance of being audited due to the complexity of their financial situations. Contrary to common belief, many audits result in no changes or minor adjustments to the tax return. Taxpayers can take comfort in knowing that the chances of being audited are rather slim. Less than 1% of tax returns are audited. And again, even though it is not necessarily a bad thing to be audited, it can be uncomfortable. This statistic highlights the IRS's focus on targeting audits where there are potential discrepancies or significant red flags, rather than auditing a large number of taxpayers randomly. So just note that you may be flagged if there's something unusual about your tax return. That does not necessarily mean that there's something wrong. How are selections made? So being chosen for an income tax audit doesn't automatically indicate errors or issues with the return, but rather it signifies that the return has been selected for closer scrutiny. So there are various reasons why a return may undergo an audit. So one of them is statistical selection. The IRS employs computer-based models and algorithms to select certain tax returns for further scrutiny. These selections often stem from deviations in figures or outcomes within this return compared to standardized norms derived from similar groups. So basically, they have these algorithms in their computers that are used to detect if something is slightly off, potentially, based on what other people with similar circumstances have reported. So for instance, if a taxpayer claims deduction significantly higher than what is typical for others in their income bracket and geographic region, that if that happens, their return may be flagged for an audit. And then two is related selection. So at times, a tax return may be chosen for audits simply because the taxpayer is associated with another taxpayer or business that has already been selected for examination. For example, if a business where a taxpayer holds a significant ownership stake is audited, the IRS may also audit the taxpayer's personal tax return to ensure consistency and accuracy across related entities. Initial notification. When a taxpayer is selected for a tax audit, the IRS will notify them through postal mail. So the IRS never initiates contact via phone, text, message, or email. So the taxpayers can rest assured that the IRS always initiates contact regarding a tax audit through postal mail. So over the years, there have been numerous scams where scammers impersonate the IRS, threatening individuals with consequences like jail time, unless immediate payments are made. So if a taxpayer receives such communications, they should avoid responding or engaging with the sender because, like I said, the IRS will never notify or make the initial notification through text message or email or phone. So there are three types of audits. One is correspondence audit. So a correspondence audit, as the name suggests, is conducted with an in-person meeting between the taxpayer and the IRS auditor. So instead, documents or other information are exchanged through mail, fax, or other electronic means. For example, if you receive a letter from the IRS requesting additional information about a deduction you claimed on your tax return, this letter is part of a correspondence audit. You gather the required documents, such as receipts and bank statements, and send them to the IRS via mail. The IRS reviews these documents and responds with their findings, all without any face-to-face meeting. Number two, field audit. For a field audit, the auditor will perform the examination at the taxpayer's home business location or the practitioner's office, if applicable. For example, suppose the IRS selects your small business for an audit, for an audit field. An IRS auditor schedules a visit to your business location to examine your financial records, receipts, and other documentation. The auditor conducts the review on site, allowing for direct interaction and immediate clarifications of any questions that arise. For an office audit, the taxpayer will go to their local IRS office to meet with the auditor in person, answer any questions, and provide any requested documentation or information. Regardless of the audit type, the taxpayer will be contacted first via US mail, and the letter will contain detailed instructions on how the audit will be conducted. So for example, imagine you receive a letter from the IRS informing you that your tax return has been selected for an audit, or excuse me, an office audit rather. The letter provides a date, time, and location for a meeting at your local IRS office. It also lists the specific documents you need to bring, such as your W-2 forms, receipts for charitable donations, and any other relevant financial records. On the scheduled date, you visit the IRS office, meet with the auditor face to face, answer their questions, and provide the requested documents for review. And also, just a side note, if a taxpayer gets a notice for a correspondence audit but finds it difficult to submit the requested information by mail or electronically, they can request an office audit. So this lets them bring the records in person for the IRS auditor to review. Upon receipt of the letter. So when a taxpayer gets a letter from the IRS about an audit, It's important to promptly respond to all requests for more information, documentation, or action. Ignoring the communication can result in additional problems, so it should never be overlooked. Also, just a little side note, if a taxpayer requires additional time to respond to the IRS's requests in the letter, they must contact the IRS by mail or fax to request a one-time 30-day extension. The IRS grants these extensions at their discretion. Documents requested. So the items or documentation requested by the IRS auditor can differ from one audit to another. The IRS may approve certain electronic records, such as those created by tax software programs. And the IRS auditor decides which records are acceptable based on the situation. So here's some commonly requested supporting documents during an audit. Receipts, so these, they show proof of purchases or expenses. Bills, so invoices or statements indicating payments were made. Canceled checks, these are, bank records showing payments made and to whom. Legal documents, so contracts, agreements, or court orders relevant to financial transactions. Logs or tickets, so records of travel, entertainment, or other business-related expenses. Medical records, documentation related to medical expenses claimed. Loss of documentation, so evidence of losses due to theft, casualty, or disaster. And also employment documents, so forms such as W-2s or 1099s indicating income received. Periods under review. Typically, the IRS audits tax returns filed within the last 3 years. However, if a significant error is identified, the IRS may extend the audit to include additional years. So typically, the IRS focuses its audits on tax returns filed within the last 3 years. This time frame allows them to review recent financial transactions and ensure accurate reporting. However, if the IRS uncovers a substantial error or suspects fraud, they have the authority to extend the audit period. This extension may include reviewing tax returns filed beyond the initial 3-year window. The IRS aims to thoroughly investigate any discrepancies to maintain tax compliance and fairness in the tax system. It's uncommon for the IRS to review returns from more than 6 years ago, and the IRS prefers to conduct audits promptly when possible. How long does an audit take? So it depends. It's based on a number of factors, including the type of audit being conducted, complexity of the underlying tax issues or positions, accessibility of required information or documentation, scheduling flexibility between the taxpayers and IRS representative, and then agreement or disagreement between the taxpayer and auditor regarding identified issues and findings. So one of the primary concerns for many taxpayers may revolve around the time, effort, and inconvenience involved in undergoing an IRS audit. Taxpayers often ask, how long will this process take? Unfortunately, there is no correct answer. The duration and complexity of an audit can vary significantly based on several factors, which are these I just named. Taxpayer rights to know. So last week, we did a presentation on the Taxpayer Bill of Rights, and a few of these rights are highly useful and important to be aware of while dealing with the IRS and specifically IRS audits. So 1, the right to be treated professionally by IRS representatives. Taxpayers are entitled to respectful and courteous treatment throughout interactions with IRS personnel. 2, the right to confidentiality regarding tax issues. Taxpayers have the assurance that their tax information will be kept confidential and used only for authorized tax purposes. 3, the right to know and understand the process and potential consequences involved. Taxpayers have the right to clear explanations of IRS procedures and the implications of potential outcomes. 4, right to legal or other professional representation. Taxpayers can seek assistance from qualified professionals such as tax attorneys or accountants to represent their interests. And 5, right to appeal the IRS and/or judicial system. Taxpayers have the opportunity to challenge the IRS decisions through administrative appeals within the IRS or through the judicial system if necessary. Frequent reasons for audits. Common tax audits issues common tax audit issues include but are not limited to one, income significantly higher or lower than usual. So auditors scrutinize income that vary greatly from typical expectations for a taxpayer's profession or income bracket. Large deviations may indicate potential errors or unreported income sources. Two, so reported income discrepancies compared to employers or entities filing Form 1099s. IRS audits often focus on discrepancies between income reported by taxpayers and what employers or companies report on Form 1099s, 1099-S. Any inconsistencies may lead to further investigation to ensure accurate income reporting. And three, deductions substantially differing from standard norms based on income and return type. Auditors pay close attention to deductions that seem unusually high or inconsistent with standard deduction patterns for a taxpayer's income level and the type of return filed. The scrutiny ensures that deductions are legitimate and supported by proper documentation. And then four, income expenses detailed on Schedule C for self-employed individuals. So Schedule C is commonly audited for self-employed individuals, freelancers, or small business owners. Auditors verify that reported income and claimed business expenses are accurate and supported by relevant documentation. This ensures compliance with tax laws and prevents overstatement or understatement of income. Frequent reason for audits. One, excessively high charitable donations. Auditors may investigate charitable contributions that appear unusually large compared to the taxpayer's income level or typical giving patterns. They verify whether the donations were properly documented and whether they meet IRS guidelines for deductibility. So let's say you report on your tax return that you donated $1 million, but you only make 50,000 a year. This, it seems unreasonable, and therefore the auditors may investigate this. So two, losses from hobbies. Taxpayers sometimes claim losses from activities that the IRS considers hobbies rather than business endeavors. Auditors scrutinize these deductions to determine if the taxpayer legitimately engaged in the activity to make a profit, which also affects the deductibility of associated losses. Three, incorrectly claiming the health premium tax credit. The health premium tax credit is designed to help eligible taxpayers afford health insurance purchased through a marketplace. Auditors review claims to ensure taxpayers meet eligibility criteria, accurately calculate the credit based on income, and provide required documentation. Four, earned income tax credit, which is also referred to as the IETC. So the IETC is a refundable tax credit for low to moderate income working individuals and families. Auditors verify that taxpayers claiming the EITC meet eligibility requirements, accurately report income, and correctly calculate the credit amount based on the number of qualifying dependents. So just to recap what we discussed. One, how audit selections are made. So audit selections are made based on several factors. So random selection and computer screening play a significant role, with IRS using statistical formulas to compare returns against established norms for similar returns. Additionally, returns related to other taxpayers under audit may be chosen for examination. Information matching, such as discrepancies between W-2s or 1099s and reported income, can also trigger an audit. Document matching errors, where third-party documentation does not align with reported amounts, are another common cause. Two, initial notification. The IRS typically notifies taxpayers of an audit through a letter providing details and instructions on the next steps. The official notification is always sent by mail. So if you receive phone calls, text messages, emails saying that you have been audited and they ask for all sorts of stuff, it's likely a scam, as there have been many scams that resemble what I just said in the past. Three types of audits. Correspondent audits. So this is the simplest form of audit, conducted entirely by mail. the IRS requests additional documentation to support specific items on the tax return. It usually involves resolving straightforward issues like mismatches or missing documents. 4 documents they may request. So, excuse me, we have 2 more types to go over. The office audit is the second type of audit. This is conducted on IRS an IRS office, and this type of audit requires the taxpayer or their representative to meet with an auditor in person. Office audits are more complex than correspondence audits, involving detailed questions about various aspects of the tax return. And then the third type of audit is the field audit, and this is the most comprehensive type. So field audits are conducted at the taxpayer's home, business, or accountant's office. These audits cover a broader range of issues and require an in-depth examination of financial records and documentation. 4 documents they may request. During an audit, the IRS may request various documents to verify the information on the tax return. Income documentations such as W-2s, 1099s, W-2s, 1099s, and bank statements is commonly required. They may also ask for expense documentation, including receipts, invoices, and proof of deductions. If the taxpayer owns a business, the IRS might request ledgers, expense reports, and other financial records. Previous tax returns could also be reviewed to ensure consistency and accuracy. 5, time the process takes. The audit process timing can vary. Initially, taxpayers have 30 days to respond to audit notices. The duration of the audit itself depends on its type and complexity. Correspondence audits, so this is one of the types of audits, are usually resolved within a few months, while office and field audits, the 2 more complicated ones, can take several months to a year or more, especially if the issues are complex or if there are delays in providing requested information. And then 6, frequent reasons for audits. So several common factors can trigger an audit. High deductions relative to income may raise red flags. A reported income, often identified through discrepancies between reported income and third-party information forms, is another frequent cause. Excessive or unusual business expense claims can also attract scrutiny. And then claims for home office deductions that seem disproportionate may be questioned. Large charitable contributions relative to income are another common trigger for audits. So with that, thank you very much. And again, since our services are free, donations are crucial for our support and expanding our reach. Monetary donations are greatly appreciated. Additionally, those who can volunteer their time, expertise, or help spread awareness, are a great help. If you had any questions about anything during the presentation, please email us at info@taxpayershelpcenter.com, and your questions will be answered by a tax professional. With that being said, thank you all for listening and have a great day.